Welcome to Friday's market wrap-up here at Wealth Creation Investing. Matthew Buckley, the Chief Investment Strategist here at WCI, and really starting to see earnings come in full force this week. But I got to tell you, folks, it's your typical Wall Street sandbagging. About 65% of S&P companies that have reported so far have beat, and only about 23% have missed, and about, 12% in line with expectations. But folks, classic Wall Street. Underpromise and overdeliver, right? We've talked about the negative pre-announcement guidance has been the most negative since the first quarter of 2001. So everybody ran out to the nearest microphone they could find, said how bad their earnings were going to be, and then when they came in a little less than horrendous, the market rewards it, right? But folks, you can only kick that can so far down the road. Coke, Yahoo, Intel, IBM, eBay, Google, GE, Microsoft, really seeing revenue or earnings per share misses, and revenue just coming in not good. So what recovery? Right? What recovery have we talked about? And Mr. Bernack, apparently your easy money game plan hasn't found its way into corporate earnings yet. So again, here we are, folks. We're in bizarro market where the market can go up and keep going up, even though the largest municipal bankruptcy filing in our nation's history has occurred. Right, Detroit. Just a little side comment or question for you. What political party has run Detroit essentially forever and made promises that they can't keep? Sound familiar? This is just an absolute national embarrassment for us. And a couple years ago, was it 2009, President Obama touting how he saved Detroit. A little quiet out of the White House today. And you can be damn sure that they're not even thinking about a federal bailout, because I think our nation would go crazy. You cannot promise everybody everything and hope to deliver. It's just not going to happen. So absolute embarrassment for our nation today. And guess who's next? You got a Chicago, you got a California, or Illinois and California. Both those states are absolutely bankrupt as well. So the municipal bond market is seeing shudders today, and it's going to get worse, folks. It's not going to get better. And I think Detroit's the first card in a big house of cards here. So not really good stuff going on, folks. China, obviously, seeing a big slowdown as well. And that's impacting a lot of earnings here in the United States, whether it's Yum Brands or Intel. The slowing in China is really hitting our corporate profits as well. So we have, municipal bankruptcies. We have really bad earnings, folks. And Wiz, you said 65% have beat, but as we talked about, they're playing the Wall Street game of underpromise and overdeliver. So here we go. We're in bizarro market where this bad news is going to end up resulting in good news, because the Fed is not going to be able to leave the market anytime soon and expect this economy or the stock market to survive on its own. Obviously, the economy is doing horribly, but the stock market's doing great. Even on a day like today, after a bankruptcy filing and a Google miss and a bunch of other earnings misses, the market goes higher. You can't fight the Fed, folks. You can't fight $85 billion a month in equity or liquidity being boosted in this market. So just smile, suck on your hopium and trade as the market goes higher. Putting on a weekly trade right now and over Top Gun Options in our weekly options model portfolio, a bull put spread out to next Friday on Google that's already making money as Google recovers here. So even with a big top and bottom line miss out of Google, the stock's recovered and is going higher. So hold your nose, folks. Take your hopium, go higher. But be ready for when the music stops, because it's going to be ugly, okay? And I don't want to sound like the crazy guy off the I-95 exit ramp, but the end is near. This has got to end eventually, and when it ends, it's not going to be pretty. So hopefully you're hedged and you at least have a chair when the music stops, okay? Well, have a great weekend, and I'll be back with Monday's Market Outlook as we get into about the third quarter of Q2 earnings season, and we start looking towards the end zone there and really seeing, once earnings season gets over with, where the market's going to go as we move into the fall and see what the Fed's ultimately going to do. Okay, so have a great weekend, and I'll talk to you all Monday.